Hello. Now, given the severity of the economic recession from the COVID-19 pandemic, some investors are questioning whether the Federal Reserve will cut policy rates to negative, just like Europe and Japan. Is that likely? Several senior Fed officials, including Chairman Jerome Powell, have already said that the impact from negative interest rates isn't going to be great on boosting the economy. First, interest rates are already quite low. And what's stopping companies and households to borrow is the pandemic, not the cost of borrowing. And the pandemic is stopping companies from doing business, and lowering rates are not going to encourage them to borrow or spend. Second, the Federal Reserve has already introduced a number of measures to help the economy. Not only that is buying an unlimited amount of government bonds, it is also planning to buy corporate debt and business loans. Now, this shows that the Fed is focusing on bringing liquidity to those in need, not just to reduce the cost of borrowing. Even if we don't expect the Fed to introduce negative interest rates policy, it has pledged to keep policy at zero for an extended period of time. Meanwhile, a sharp drop in demand is likely to keep inflation low for the next 12 months, possibly longer. This implies the risk to US government bond yields remain on the downside. Meanwhile, investors' demand for high-grade corporate bonds and high-quality emerging market fixed income should stay strong, given the zero cash return environment. Investors can continue to look out for fixed income as allocation with the intention to generate income.